Hi everybody, welcome back to Fixit Finance. Today we're going to be discussing a few key points and on what to do with your money in this time, in times of uncertainty. So a lot of these points have come from discussions I've had with people who've asked me questions or had certain questions about what they should do in this time. So I'm hoping this video would be able to help more people. And if you have any questions, if what I talk about today brings up more questions, please feel free to email, call, text, if you have my number, and leave a comment below, share the video, and let me know what you want me to address. So the first thing is, in this particular period, my biggest and my first advice to everybody that I've been talking to is do not cash out your investments and do not touch your retirement for anything at this time. Why? Because if you touch, for example, your RRSPs, there's going to be a 10% penalty. Well, they're going to take 10% off the top, as depending on if you take less than 5,000, it's 10%. More than 5,000, I think it goes up to 15. Then more than a certain point, it goes up to 20. So long and short is, if you take up to 15,000 out of your RRSPs at this time, the tax, the percentage is 30%. So do not touch your RRSPs for any reason. If, for example, you withdraw less than 5,000, they take 10% off. It's gonna count as income next year. So you're just gonna, add to how much taxes you have to pay next year as well if you touch your retirement accounts today. That's one. Two, if you touch your RRSPs, your investments right now, you're going to be selling it at a loss to a large extent. Why? Because the markets are down, meaning you paid more for it and you're selling it at a lower point, and there's really no point to that. So whatever you do, don't touch your retirement accounts in any way, shape, or form. Thank God for the country we live in. There are lots of options and lots of I guess resources out there that the government, banks and whatnot have done to help people in this time. So you shouldn't need to touch your retirement accounts. So if you see me glancing down, my notes are down here, so I apologize for looking down, but it's a lot of points I have today. Okay, the next thing is, whatever you do, as much as possible, try as much as possible not to take out any new loans in this time. Yes, interest rates are dangerously low, and it seems like it's a good idea to take out a loan right now, but I would highly suggest if you don't need to take out a loan, do not take out a loan, in the sense of you can wait to buy that car, you can wait to purchase that house. Right now, these are times of uncertainty. You really shouldn't be making any huge financial decisions at this time. Not because of fear, but just out of wisdom and common sense, to be honest. You really don't want to make any huge drastic financial decisions because you have no idea what the tail end of this whole situation is going to be. The next thing is, if you do have loans already, so for example student loans, mortgages, lines of credit, now is the time to call and renegotiate that interest rate. So for example, if you're in a mortgage that's say 4-5%, interest rates are ridiculously low right now. Call your bank and see if you can refinance that mortgage. Make sure you're taking into account whatever closing costs or transfer costs they're going to charge you, to see if in the long run it actually makes sense. 9 out of 10 times it will, just because interest rates are so low right now. But whatever you want to do, if you want to take advantage of that, or if you want me to help you, calculate what that's going to look like, please let me know. I'll be more than happy to help you. But whatever it is, if you do have loans, so for example, if you have federal loans, kind of like I talked about in previous videos, the government is giving us giving everybody who has a student loan a 6-month interest-free break. So now is a good time to take advantage of actually paying back that loan if you are able to. Why? Because there's no interest right now on the loan. So this is a good time to pay it off as much as possible. The next thing is, if you have lost your job in this time, again, I know I said it earlier in the video, but thank God for the country we live in. There's so many resources out there right now, and so many. I know it's taken a lot. The system, the government system has actually taken a huge hit because of the amount of people that are applying for things like EI and the CERB. So I think it's the Emergency Response Benefit, something like that. Whatever the case may be, if you are in a situation whereby you've lost your job or your hours have been impacted, as soon as you get your record of employment or whatnot, make sure you apply for the resources. Right. Next one is for everybody. I personally believe that things will not return back to normal. What do I mean? In the sense of, after this whole situation passes by, there is going to be a new normal. New normal in the sense of, this particular situation is showing a lot of the things that are quote unquote necessary or unnecessary. So what I mean by that is you should be ready as an individual, as a business, as a family, to understand that you would have to, your mindset will have to change during and after this period. Your way of doing things will have to change during and after this period. So prepare your mind for change. That's what I'm trying to say with this point. Just prepare your mind for the sense of a lot of the things that you thought were normal may not necessarily be no. There's going to be a new normal after this. There has to be. I personally believe that. I could be wrong, but I definitely think, at least in the personal finance world, in the finance world, heck, in the accounting world, we're already seeing the changes just within the past few weeks, you know, in terms of how businesses are operating and whatnot. But at the end of the day, there is going to be a new normal. So as an individual, prepare your mindset for change. What I'm saying is be flexible, don't be stiff, you know, don't be rigid, and just be ready to change, change for the better, because things are going to be done better. Things are going to be much more efficient, in my opinion. At least that's what I'm seeing or predicting. But yeah, that's just by the wayside point. Next thing is, if you do have a job, thank God. If you haven't lost your job, or you haven't been negatively, you know, hugely negatively impacted by this whole situation, I would suggest, if you have any debts of any kind, now is the time to pay it off. So for example, if you and your spouse are in jobs that, you know, you don't see it being affected in the near future, in the sense of you're both working professional jobs, for example, or jobs where you have the option to work from home and you're still being productive. So chances are those kind of jobs will still be in place by God's grace, you know, between now and when the curve flattens. So what I'm advising you is, in this time, now that you're at home, you're not spending money eating out and, you know, doing unnecessary activities, take all that money and pay off your debts. Interest rates are very low. Banks and whatnot, you know, like, now is the time to get your act together. If you have debt, student loans, credit card debt, lines of credit, pay them off, and pay them off now, and give yourself some peace in the process. The next thing is, if for example you have a job but you don't have debt, so you're completely debt free, you don't have a credit card debt, you don't have a car payment, you don't have, thank God. Next thing is, what you want to do is save up a 3 to 6 month emergency fund. You guys know I'm huge fans of Dave Ramsey, so basically what I'm talking about is baby step 1, 2, and 3. If you baby step 1 is to save $1,000. Baby step 2 is to pay off all debts. Baby step 3 is to save 3 to 6 months of expenses in an emergency fund. Now, if you don't know where to put an emergency fund, I would suggest places like, you know, EQ Bank, Wealth Simple, places whereby you can save money and, you know, get a decent money market interest rate of anywhere from 1 to 2%. I know it's gone down now because of everything that's happening, but that's just a good way to park money so that it's not in your bank account, whereby you can quickly access it. So, like, you know, you won't go touching it because you want to order a new camera, for example, you know. But at the end of the day, you would have access to it if you do run into, or if you have an emergency. Emergency being, oh, you know, God forbid someone gets sick, or God forbid somebody loses their job. You have that money sitting there to help you coast in the meantime. Last but not least, if you don't have debt and you've saved up your emergency fund, and, you know, you're in a situation whereby you do have excess cash, because if you don't have debt and you already have an emergency fund, you have all this cash flow, now is a great time to buy, because everything is on sale, and it is awesome. So yeah, if you find yourself in that particular situation whereby you don't have debt, you've already saved up your 3 to 6 months of expenses, now is a good time to, you know, pile up cash and buy investments as much as possible. Investments being, you know, good growth stock, mutual funds. You can, if you're into single stocks, I would say, you know, gamble on. There's nothing wrong with them if you know what you're doing. But if you don't know what you're doing, what I mean is, if you have money to invest now would be a good time to pick some good growth stock mutual funds. Anyways, I hope you've learned something from this video. If you have questions, please let me know. Leave a comment, like the video, subscribe, share with your friends. And again, I'm always available via email, you know, and any other means of communication. I'm on Instagram as well as Facebook. And just let me know what questions you have, and I'll be more than happy to answer it. Thank you so much for your time.